Hi, good evening, everyone, and welcome back to our Rakuten Insights. It's great to be reconnecting with you all here as we kick off our first Rakuten Insight of 2026. So tonight, joining with me is Park Leng. Hi, Park Leng.
Hello, everyone.
Hi.
Have fun, Leng.
So Park Leng will be sharing the market overview, and after that, I'll be walking you through how the KLCI has been performing so far, and more importantly, what is driving the return for foreign fund inflows into Malaysian equities. So without further ado, let's pass the floor to Park Leng. Park Leng, over to you.
Thank you, Crystal. Okay, let's see how global the major indices did last week. In US, it was a roller coaster, up and down, mainly due to geopolitics tension and on the Greenland and also in Iran, because news like such news could have a negative impact to the stock market. Yeah, especially the United States is the one that who leading that those geopolitical issue, right? But in Hong Kong, market was also down, mainly were due to profit taking of some tech stock. Okay, next. All right, KLCI weekly performance. KLCI did quite well last week, and this is mainly due to strong support, bank support from local institution plus foreign. As we can see, the local retailer has been the seller for the 4 straight day, right? But the strong buying from local institute and foreign pushed the index higher. And last week the index closed at many multi-year high on several days. So I think this also continued to today, and today also next. Okay, today the index surged about 27 points, or 1.56%, which is very significant, and we hardly see this in many for some time. Yeah, and also the index is currently in a position there where if it breaks 1780, it will be definitely on its path to 1,800 very soon. Our target will remain 1750 to 1780, as we expect a little bit of profit takings, as the index is currently move into overbought region. Yeah, there could be some profit takings, but after this short-term correction, we believe the uptrend will resume. All right. Okay. Okay. I'll give a pass back to Crystal.
All right. Okay. So thanks, Park Leng, for the market brief. Now into our main topic, mainly talking on KLCI, foreign fund flow, and also talking on blue chips. So since January this year, KLCI has been performing really well and also creating multi-year high today. So looking at the KLCI performance year to date, we can see that KLCI has actually delivered a fairly constructive performance. So we are seeing improving market breadth across the blue chip counters, and as of 23rd January, which is last Friday, we see that 20 out of 30 KLCI constituents are trading in a positive territory. As you look at the chart, there is 20 green bar candle. So while only 6 are in the red and 4 are flat. So this tells us that the index is not being pushed by just one or two stocks, but is supported by broader participation across the heavyweight names. So looking specifically at our first quarter FY25 market outlook stock picks, that time we picked Gamuda, Mbank, PPB, Tenaga, and Mr. DIY. So their performance has been in a mix so far, which is quite normal at this stage of the cycle. So what's important here is that the fundamentals remain intact and their long-term upside continues to support the improving, also supported by the improving macro conditions and also earnings expectations. So now the key driver behind this improved index performance is actually the return of foreign fund inflows. So this is the chart, the bar chart collecting the retail, the insti, and also the foreign fund flow last week. So we can see that from Wednesday to Friday last week alone, foreign investors recorded a cumulative net inflows of 511 million ringgit, bringing year-to-date foreign inflows to 846 million. So this marks a clear shift from the outflow trend last year, about 22 billion, and now it's actually turning into net inflow. That's why that's the main reason that the KLCI has been holding up well so far. So there are a few reasons behind this. So first, the strengthening of ringgit has materially improved the Malaysia's risk-adjusted return profile. So the ringgit has appreciated to 3.95 ringgit today from approximately 4.50 ringgit in January last year. So reducing currency-related downside for the foreign investors. So this is particularly important as it allows Malaysia to attract capital even without immediate earnings upgrades, as the forex stability alone enhances total return expectations. And second, despite the recent market uptrend, the Malaysia equity valuations remain at a discount relative to the regional peers. So this valuation gap continues to provide scope for re-rating, especially in the large cap index-linked names that dominate the KLCI. So as a result, foreign funds are able to increase exposure without paying a high valuation. And third, earnings fundamentals are improving. Expectations point to the earning growth is around 7.1% in 2026, a meaningful acceleration from approximately 1.3% in 2025. So this shift signals that index performance is increasingly supported by the earnings delivery rather than the sentiment-driven flows, reinforcing confidence in the sustainability of the rally. And lastly, the global portfolio rebalancing is also playing a role as investors and fund managers rotate out of US denominated assets amid the valuation and also the rate considerations. Malaysia has started to re-emerge as an attractive alternative due to its combination of its currency strength, reasonable valuation, and also improving earnings visibility. So putting all these together, it helps explain why foreign inflows have led to a strong impact on the KLCI, especially given the index market cap weighted structure and its heavy exposure to the liquidity and also institutional owned stocks. So that's the reason why foreign inflow that lifted the KLCI. So now let's have a brief look on the first quarter FY26 topic technical. So first one we have Mbank. So Mbank has performed strongly since August last year and closed at a new multi-year high at 6 ringgit and 68 cent today. So we believe a break above the previous resistance at 6 ringgit 70 cent is likely in the near term, although a mild pullback may occur along the way. And next we have the Gamuda chart. So Gamuda underwent a deeper correction than we expected and recently found a key support at 4.53 cent. And the stock is actually starting to rebound from its recent low few sessions ago, signaling a potential trend reversal in the near term. So a confirmation will be established upon a sustained close above the EMA lines looking forward. And next we have Mr. DIY. So Mr. DIY extended its upside following our market outlook call and is currently testing its immediate resistance level, which we believe is likely to be breached very soon, probably the next few sessions. And then we have Tenaga. So Tenaga broke above its immediate resistance yesterday and continued to close higher today. We believe the stock has accumulated sufficient strength and is poised for next leg higher. So the uptrend reversal was confirmed following last month's bullish crossover, and the breakout above is consolidation range. And last but not least, we have PPB Group. So PPB formed a white candlestick and broke above its immediate resistance at 11 ringgit and 10 cents. So this signals that the bullish bias remains intact, supported by the firmly traded EMA lines. And yep, that's all from me today, a short one. Now it's time for Q&A. Feel free to drop your questions in the comment and we will answer them shortly. Let me bring back Park Ling to the floor. Hi,
Hello.
William.
Hi.
Nice to see those familiar names with us today. Hi, Victory88X from YouTube.
Do you have any questions?
Okay, I saw some question coming in. We have KS asking SP Satya and YTL REIT. Okay, let me share my screen. SP Satya. I think I wrote a technical idea on this 2 days ago. So looking at SP Satya, we can see that looking in the long term. Okay, so long term actually it is quite volatile, but trading in a bigger range between this 1.80 to its recent low is about 40 cents. So looking in the near term, we can see that starting 2024, it has been in a downtrending movement. But looking nearer to second half last year to this year to date, we can see that SP Satya has touched its recent low at 72 cents and started to rebound quite firmly and solid. We can see that after it break out from this bullish, let me clear some lines. Okay. After you break out from this bullish flag pattern on last Friday, and it has continued its bullish momentum and surpassed our first resistance at 93 cents, followed by 97 cents, which is quite strong momentum that support the upside. And due to this, we can see that there is a newly formed EMA line just 2 sessions ago, which means that this is a bullish signal that pushed the stock, that signals that the near-term upside is remain potential. We can see that after it breaks this second immediate resistance at 97 cents, it has reached a today high at 90 around 1 cent. So we believe looking forward, SP Satya could test a new immediate resistance at 6 cents, followed by 12 cents. But it's also potential that SP Satya could experience a mild pullback on profit taking, but as long as it holds above 93 support level, then the upside momentum remains intact. Okay, that's the view for SP Satya. Next on YTL REIT. Okay, YTL REIT. Looking at long-term wise, actually, after a sharp downtrend at 2020, it has been moving in a sideway, and recently around 2024, it has break above its immediate resistance, and since then it's moving in a sideway and break below its key support at 1.15 cent. So looking in the near term, YTL REIT is actually quite a low volume trading stocks, so we can see that it is moving in a rectangle consolidation pattern. So a few sessions ago, it breaks above its immediate resistance, but I don't see any much movement for YTL REIT. So looking forward, I believe YTL REIT will be just trading within a range between its next immediate resistance at 1.20 cent to between the support level will be 1.09 cent. Probably will be trading within this range looking forward. Okay.
Yeah, on current valuation, YTL REIT offers a potential yield of more than 8%, but based on the new regulation on the REIT, this dividend income will be subject to your income tax. Therefore, 8% yield after deducting tax, it could be range from 5 to 7%, depends on your income, on your personal income bracket. Okay. Next.
Okay, thanks, Pak Leng, for the add up. Next, we have from YouTube asking CloudPoint, Pekat, and SolarVest. CloudPoint. Okay, so CloudPoint listed around 2023. Since then, we can see it is in the sideways movement, but I think around last year, November, it break below its key support at 70 cent. And recently, it also break our next immediate support at 64 cent. So looking in the near term, we believe CloudPoint might be experiencing further correction. Next immediate support will be at 57 cent, followed by 54 cent. So looking at a setup, we see no sign of reversal yet, looking that there is a bearish crossover form during early November. And since then, it has break below our few support level and also recently closed in a few red candlesticks. So we believe that CloudPoint might experience a further correction period. Support level will be at 57, followed by 54 cent. If we are expecting a rebound, then we might need to see if the stock can break above its immediate resistance first at 64, followed by 70 cent. A 70 cent break above would confirm a trend reversal. So for now, it's just quite bearish. And next, asking on Pekat. Okay. So Pekat long term doing very well. We see 1 year uptrending, and recently last year around October we see a consolidation, which is not surprised after a long period of uptrending. So we see this as a healthy pullback and consolidation phase. So the key support will be at around 1.40 cent, currently at 1.47 cent. So as long as it holds strong above this area, 1.40 to 1 ringgit 30 cent, we believe the upside still remain intact for Pekat. So looking forward, we believe that Pekat will be in a sideways movement looking at the pattern. So unless there is some probably outperforming earnings or any outstanding news, then we might possibly see a breakout from 1.77 probably a few months later. Then we might consider the uptrend to sustain looking forward. So currently it's just a sideways movement. And on SolarVest, Okay. Solar Vest actually quite similar to Percas. Both are solar players. So long term in the uptrending pattern, which is quite good. So near term also in the consolidation phase, as long as it holds strong above its key support around 2.50 ringgit, then we believe upside still remain. And if it breaks below this level, then the next support will be around 2.25 ringgit. So if it broke below this first support level, then we might see a wider consolidation pattern for Solar West. I believe their fundamental is really strong, so I believe that this is a fundamental stock. So if it break below to this level, this might be a good entry level, good fishing at a lower price. So if it rebound at this level, then we might see a potential sideways movement between 2.50 to 3.32. A break above at 2.92, holding strong above this level, could indicate gathering momentum for next leg higher. Okay. Next, asking on Capital A. Sure. Recently very hot stocks. Okay. So looking at Capital A, we can see that it is actually trending in a wide range of consolidation since 2020 until just recently last year 2025. So we see that it has break above its consolidation pattern at 2nd December and also a gathering strength period here, and broke out from another rectangle pattern, which is around 14 January, which is around last week. So after it broke out, we see that the momentum still continuing. We can see that the EMA is widening. The stock is trading further above the 20-day EMA. This indicates a bullish signal for next leg higher. So we believe Capital A looking forward might be slowly collecting, and also some pullback, some similar pattern like recent pattern, a correction and a shoot up. But looking forward, we see that the immediate resistance will be set at around 62 cents, followed by around 67 cents. So if it didn't manage to push above this immediate resistance at 62 cents, we believe the first support will be at, oh my god, too many lines. Let me clear up some lines. Will be at 54 cents, followed by 46 cents. So if Capital A break below its key support at 46 cents, then we might believe there will be a huge, larger correction period for Capital A, and possibly ranging between 46 to 37 level. Okay. Next, on Genting Malaysia and Genting from William Yip. So Genting Berhad, let's see. Okay. So Genting Malaysia actually currently trading at its lower range since it's listing near its listing range. So we can see that looking in the midterm is actually trading in a bigger consolidation sideways 5.50 ringgit to 2.90 ringgit. So looking at the short term, we can see that give me the parallel. After a few months of downtrending, its successful breakout from this downtrend pattern at 15 October. But we see that this shoot up did not sustain. After that, it has a correction and went back to its previous level. Recent low is at 2.85 ringgit. Currently, we see a small rebound. However, we see this as just a small rebound. There is no sign of confirmed reversal yet. As you can see, there is a bearish crossover also nearing its recent low. So we believe that Genting will be likely moving in a sideways as well within this range, 2 ringgit 85 to 3 ringgit. Unless it break above its 3 ringgit immediate resistance, then we might believe a potential trend reversal at a lower range, and the next immediate resistance will be at around 3 ringgit and 11 cents. Okay, so that's for Genting. Compared to Genting Malaysia, okay, so Genting Malaysia, we can see that experience a sharp downtrend and a consolidation, currently also trading at a lower range of the stocks. So we believe that looking in the near term, after uptrend for a few months, it also pulled back at the level of 2 ringgit and 40 cent, and since then it break below a few support levels set at 2 ringgit 20 and 2 ringgit 10 cent, currently trading at 2 ringgit level. So for Genting Malaysia, looking forward, we believe probably it will experience a break below at 2 ringgit level. Looking at the setup, is quite bearish. So the next immediate support will be at around 1 ringgit 83 cents. So as long as it can hold above this level, then we might believe that Genting Malaysia would indicate this level will be a good accumulation zone for testing its immediate resistance once again. Okay, next.
What's the potential reason for solar sector downside?
Potential reason for solar sector downside.
Okay, for this sector, right, because of the Naga's initiative to make 70% renewable energy by 2050, 2050. We're currently around 25%. So this will trigger a lot of installation of solar panels. With the same reason, there will also cause the emergence of many new players into the sector, which will cause a lot of competition and leading to margin compression if there's a price war. That would also hit profit of the bigger players today. Yeah, again, I think this is the major risk I can see. Yeah.
Okay. And we have asking gold price can break through 6,000 mark.
Currently, it's already all-time high, about 5,000, over 5,000. Yeah, it's still a long way to go, but we are not gold specialists here. Yeah, but looking at the trend, how is it?
Probably in the long term, it will slowly reach 6,000, but not immediately, I believe. Because gold price, looking in the long term, is actually just steadily climbing higher. So 6,000 is possible, but not in the near term. Yeah. Okay. Okay, KS has more question. Asking Psycom, Life Water, and MNRB. Okay, I think, okay, I can go through all. Psycom, okay. Okay, so we can see that Psycom currently trading at its multi-year high compared to its 2017 level. So within this period is actually just in a sideways movement. So we can see that Cycom has break above its immediate resistance at 140 cents that lasted for a few years. And looking in the near term, a break above has gathered its strength for next leg higher. We can see that there is a triangle as a symmetrical break above around 5th January, and also gathering after it shoot up. We see that there's a mild profit taking, also some strong support at 1.40 ringgit, and it continues its upside movement and currently saw a full pullback period. So we believe Cycom might experience a short pullback that holds strong above 1.55 ringgit level. So the next support, next immediate resistance will be at 1.75 back to its recent high. And next, if it breaks above, then the next level will be at around 1.84 ringgit. So looking at the technical setup, quite bullish. We can see a widened gap between the 20-day and 50-day, and also the stock jump further up from the 20-day EMA. This is a bullish signal. So a mild pullback is normal. So the next immediate resistance is 1.75 followed by 1.85. And next on Live Water, also one of my favorite after I share about the story of water last year. So we can see that Live Water still doing strong after it break out from its recent high at 1.60 ringgit, currently creating a new high at 1.68. So we believe Live Water looking forward will continue its upward movement, and the next resistance will be set at around 1.75 followed by 1.85. So the key support will be at 1.40. So as long as the stock move within this range, it is safe and the upside still remain intact. And then on MNRB, okay, so we can see that MNRB currently trading considered at its multi-year high, but during 2024 it surged at their 52-week high is at around 2.61. So we believe NNRB is likely to break its 2024 high very soon. Looking at the setup, we can see a U-shaped pattern. If I can, U-shaped recovery pattern. So we believe a break above, after it break above its immediate resistance at 2.50 ringgit would drive the momentum further for next leg higher to test 2.61 ringgit. And next will be at around, oh, it's really near 3.64 ringgit. Let's see the next one. Around 2.70 ringgit followed by 2.80 ringgit. So the setup also very bullish for NNRB. Okay, that's it. I think I'll take one last question. So Kian Steven asking, with ringgit strengthening, export counters like Thai, Franken, Franton, it should be Franken, right? Franken, Inari plunge, will they eventually follow the market uptrend or will they continue to trend down? Well, let's see on the chart first. So looking at Franken, actually, it is actually moving in a quite healthy range at a quite upper range of the full stock trend. So we can see that Franken is currently in a sideways movement after it hits its testing its all-time high at 4.80 ringgit around October last year. Since then, it tested, but it didn't went through, and we see a correction period. So currently closed at 3.98 ringgit, close to my support level at 3.94. So we can see that if the stock holds strong above this level, then there might be a potential rebound at this area accumulation zone, then to test its next immediate resistance very soon. But if didn't hold at this key support, then we might see a new support set at around maybe a nearer one, around 3 ringgit and 80 cent. Okay, so for Franken, we might see the further trend, maybe the next few sessions if it can hold strong at this level. If it didn't hold, then we might see a further correction to test the next immediate support at 3 ringgit and 82 cent. Well, as for Inari, okay. So Inari is quite volatile. Currently is at the lower range of the after its peak. So we can see that after it tried to break out and test a new immediate resistance, but it didn't went through. Currently, recent high at 2.67 and break down first support 2.30, second support 1.80 cent. Currently just slightly below the next support, so we believe that Inari most likely would try to stay strong above 1.43. So it also considered as a multi-year low. So as long as it hold at this level, we believe that this will act as a key support and likely a good accumulation zone for gathering momentum to test back its immediate resistance at 1.80 cent looking forward. Okay.
Okay. The currency thing, right? It's not just Malaysian ringgit is getting strengthened. It is the US dollar weakened against other currencies. When US dollar weakened against other currency and Malaysian ringgit also strengthened together with the regional peers, their currency also strengthens. This also make the competition quite fair. I mean, our currency have increased. I think our competitors' currencies are also has increased. Therefore, we still can offer a competitive price to the buyers. Yeah. Don't look at just a ringgit thing. You look at the whole industry. Okay.
Yep. All right, I think it's time now as it's now 8:38. I think it's time for wrap up. So thank you everyone for joining us tonight, being so engaging, truly appreciate. And so for a question, if we didn't answer, we missed out, no worries, you can always join our next Rakuten Insight session. And also a quick update here. So going forward, Rakuten Insights will be only held on a bi-weekly basis. So however, next month is a Chinese New Year month, so there will be only one session scheduled for the, I think, around 4th of the week. So do stay tuned for our updates, and we will also make some small changes for our Telegram channels if you follow us. So from tomorrow onwards, those who currently in Research Hive or are kindly advised to move over to our main channel, Rakuten Trade Ideas, where we'll be still sharing our latest report and market updates. So here are some changes for the Rakuten Insight and also our content sharing, okay? So, yep. So remember to join us next session, okay? So look forward to see you again. Until then, have a great night. Take care, everyone. Bye-bye.
Bye.